Welcome back to FX Limit, your go-to place for peeling back the layers of Forex trading and getting to the nitty-gritty of currency movements. Today, we're going to unravel how monetary policy decisions influence currency values and how you can analyze these impacts using fundamental analysis in your trading strategy. When we talk about monetary policy, we're referring to the toolbox central banks use to manage the economy. This includes the adjustment of interest rates, controlling money supply, and setting reserve requirements. These decisions can make waves in the Forex market, so understanding them is key to trading success. Interest rates are the headline act of monetary policy. They're like the central bank's megaphone. When they talk interest rates, the Forex market listens. A hike in interest rates can mean the currency gains strength. Why? Because higher rates offer better returns on investments in that currency, attracting more foreign capital. On the flip side, a cut in rates could mean the currency weakens as investors chase higher returns elsewhere. But the trick isn't just to watch for changes, it's to anticipate them. Forex is a forward-looking market, and prices often move in anticipation of what's expected to happen. If a rate change is anticipated and it comes through as expected, the actual movement of the currency might be muted. But if the central bank pulls a rabbit out of the hat and surprises the market, that's where we see volatility. As traders, we've got a tool for that: economic calendars. They're a fundamental analyst's best friend, listing all the upcoming dates for important data releases and policy announcements. Keeping an eye on this can give you a heads up for when to expect market movement. When central banks release their decisions or minutes from their meetings, you need to become a bit of a detective. They may use what's called forward guidance, hints about future policy moves. If you can interpret these correctly, you've got a leg up in the market. You should also consider the broader economic picture. A rate hike in a booming economy might reinforce a currency's strength. But the same rate hike amidst economic uncertainty could be seen as a desperate move, with unpredictable impacts on the currency. Remember, Forex trading is always a comparison game. It's not enough to look at one country's monetary policy in isolation. You need to consider what's happening elsewhere. If one country is raising rates while another is holding steady or cutting them, this could set the stage for a strong trend in their currency pair. When the news breaks of a central bank decision, here's how you might approach it. First, watch the initial price action. This gives you a snapshot of the market's immediate reaction. Then, zoom out and think about the longer-term trends. How does this decision fit within the larger story? Is it confirming or contradicting the prevailing trend? Risk sentiment is another player here. In times of uncertainty, investors tend to flock to what they perceive as safe haven currencies, those typically associated with strong, stable economies and monetary policies. Keep your finger on the pulse of global events, because they can shift risk sentiment and, with it, currency strengths and weaknesses. Central bank decisions from major economies like the United States can have far-reaching effects, influencing not just their own currency but also those of emerging markets and economies tied closely to them. So, to bring this home, when you're looking to analyze the impact of monetary policy on currency values, you need to be part economist, part sleuth. You're piecing together clues from economic indicators, central bank statements, and global events to anticipate and react to currency movements. At FX Limit, we don't just follow the trends, we stay ahead of them. Keep absorbing information, keep analyzing, and most importantly, keep refining your trading strategy. With the right approach, monetary policy decisions are less like wild cards and more like signposts, guiding you through the Forex landscape. Thanks for tuning in. If you found this information helpful, give us a thumbs up and subscribe for more insights that will sharpen your trading edge. Until our next session, happy trading and see you soon.